I'm Sam Slater from FundCalibre, and today is International Podcast Day. So for a change, we've asked an investor to host today's interview. And we have Dr. Beth Vamvakas, who's kindly volunteered. Beth, just before we start, would you like to share with our listeners how long you've been an investor and what you're saving for, please?
I've been investing monthly for about 5 years now, and I guess now I'm currently saving for my retirement. I mean, I have been saving prior to this for house renovations, which are now ongoing. So now I guess I'm saving for retirement and other things.
Great, thank you. Now I'll hand over to you to chat with James Thomson, manager of Rathbone Global Opportunities Fund.
Hi, James. Thanks
Hi,
for
Beth.
joining.
Thanks very much for having me.
Okay, so as I'm sure you're expecting, I'm going to ask you quite a few questions that are related to the novel coronavirus pandemic, particularly as I'm a lecturer at Imperial College, so I'm a biologist, so I have quite a lot of interest in the pandemic as well.
Well, thank you for your work too, then.
So let's start off with these ones. So you've got Amazon, PayPal, Ocado in your 10 largest holdings, and probably other companies related to online shopping. I was wondering if you're investing more in companies that are related to online shopping following the COVID pandemic and the lockdown.
Yeah, I mean, not surprisingly, e-commerce growth has accelerated, probably more than anyone imagined. It's really been a lifeline for consumers. And in fact, a lot of people were introduced to online shopping who thought they didn't really need it. Many small businesses that I've come into contact with didn't even have an e-commerce offering or a digital presence, and they're now really scrambling. The transition is being complicated by logistics. You can source the item online, but is it being posted to you, click and collect, or as they call it in America, curbside pickup, which is booming as consumers don't really want to dwell inside stores. Mm-hmm. So Amazon, PayPal, and Ocado have been in the portfolio for years and were already hugely successful investments. For instance, we've owned Amazon for almost 10 years and made 20 times our initial investment. So I think we'll continue to make money from those companies, but probably not at that same rate. Now I'm investing in companies that help other companies get online and sell so they can compete with Amazon. I'm investing in a company that helps consumers communicate with businesses and vital government services. How many times during this pandemic have we had tried to get in touch with our bank or our pay TV provider or insurance company or local council, only to be met with that message that due to coronavirus, you may have to wait longer, we have fewer staff. What if many of those questions could be answered without speaking to a live person? An automated conversation that is actually smart and works. No more waiting on hold, no more having to call between 9 and 5. And just a tiny fraction of groceries are delivered to our door. Why? The UK is leading the charge for online grocery, but the rest of the world is about to follow. Ocado just announced a 50% increase in sales. And I think really this is being used as a template for the rest of the world. And the UK is really at the forefront. And then, what about takeaway food? Many of us don't feel comfortable eating inside a restaurant, but, don't want to ruin another meal at home with our terrible cooking. So the food and the restaurant industry is having to digitalize and retool for online ordering and home delivery. The companies that make French fries and chips are having to change the coatings they put on their chips so they don't get soggy during the delivery. I'm getting hungry. This really is a tidal wave shift to online everything taking place right now, and it's a big feature of my fund.
Yeah, that's all rings true to me. I mean, I found getting through to a call center has been a nightmare, but I'm using live chat a lot more now, emails, and certainly lots more takeaways and hardly any restaurant. I mean, I think I've been to one restaurant, and that was such a novelty.
Yeah, and that matches with all the consumer surveys that our analysts have been doing. Is that despite the perceived improvement in the pandemic, there is this lingering fear out there, and the CEO of Ocado said people want to spend their risk carefully. If they don't need to take any risk by doing their grocery shopping online, then that makes a lot of sense. But they probably do want to spend some risk seeing their friends and family and going for dinners. So it's all about, making these choices, and online often makes it a lot easier.
Yeah. So sort of following on from that slightly, obviously in the UK, we've had the furlough scheme, which has been very supportive for many businesses, preventing them having to lay off their staff. And other countries as well have had similar schemes in place. Do you think, did this make a difference to your confidence in continuing to hold investments in the UK or other countries? And do you think this will change as the schemes start to wind down?
Yeah, furlough schemes and really a broad package of government stimulus across the world has been a key cash flow bridge for companies and individuals. If we rewind the clock back to 2008, the last crisis, it took over 600 days from the start of the crisis until the full stimulus package was enacted. This time, it's been 100 days from discovery of the virus in January in China to approval by U.S. Congress and governments around the world. That really is lightning speed, showing rare unanimity and clarity of purpose. So that's actually, I think, why we saw the rally in the stock market from mid-March lows that surprised so many people. There was very little clarity then, but that's what financial markets do. They anticipate. They start to rise when policy and liquidity is at its greatest, not necessarily when there's clarity. But you're right. I am worried about the next phase, and I think it will cause stock market volatility and real-world hardship in the months ahead. The difficulty with this crisis is that the recession in some sectors, they're unaffected and might even be benefiting, like technology. But there are others, like hospitality and leisure, that are facing imminent collapse. And it doesn't help that the politicians are refusing to compromise in order to score political points. And that's particularly true in the run-up to the US election.
Yes. So I go two directions. I'll go for the healthcare, because you're talking about companies, areas that are expanding. So you do have a decent proportion of investments in the healthcare sector. So do you think that the pandemic has created opportunities for private companies to expand in this area?
Yeah, this is another part of the market that is undergoing significant change that started prior to the pandemic, but has been accelerated. The COVID-19 vaccine is a good example. Most likely this vaccine will not be produced and manufactured by the company that discovered it. Increasingly, the most innovative, early stage companies who come up with these breakthroughs, they just don't have the capital, the time, or the skill set to build $500 million multi-use manufacturing facilities that take 3 years to construct ahead of a drug or a vaccine that may not even get approved. And we are moving away from a world of mass-produced little pills. As you probably know more than most, we're entering a world of tailored medicine, biological drugs that are suited to small batch production that can be later modified or expanded. Areas like monoclonal antibodies, cell and gene therapy. I think this is where the big breakthroughs are going to happen in cancer and Alzheimer's. Now, you can get, very overexcited about these companies. I mean, who wouldn't want to be the first person to invest in a company that might discover the first ever sort of efficacious therapy for Alzheimer's? But, don't forget that these private companies are, they tend to have just a few products in clinical trials, and they're probably the highest risk investments you can make. So I wouldn't do it in this fund. From an investment perspective, I have chosen to invest in the companies that provide the healthcare equipment, that outsourced manufacturing, which is playing into really what I think is an unstoppable trend.
What about diagnostics? Do you have an interest in? There's quite a lot of new technologies coming out in the diagnostic area. Do you have any interest in investing in that field?
Yes, I mean, I have some tangential investments in sort of med tech and companies who are more in the equipment side of things. I've had a look at a few U.S. diagnostic companies as well, but we haven't pulled the trigger there yet. But I'm invested in a company that makes, the filters, the fermenters, the bioreactors that go into drug manufacturing. I don't want to say who they are because I don't want to be seen to be sort of feathering my own nest or tipping the stock. But they're working, for instance, with about 80% of the COVID-19 vaccines that are currently in trials. Mm-hmm. I don't know which one will be successful, but the chances are pretty good for the company that supplies the vital equipment, to almost all of them.
So you mentioned the US. So you hold quite a lot of investments in the US. So how do you think Joe Biden victory would affect the American and the international markets?
Stock markets have done well under Trump, but that doesn't mean they can't do well in a Biden presidency. He's a centrist. And what really investors have been most worried about is a sort of sharp 180. And that's really been taken off the table now. So the polls are showing by a statistically significant margin that a Biden victory is the most likely. But remember that presidential elections are won by swing voters in swing states. And they change their minds and they make their decisions late. And it's often heavily skewed to the outcome of near-term events. There's also a streak of anti-establishment and shyness going around, meaning that what the voter tells the pollster might not be the way they actually vote in the anonymity of the polling booth. So overall, investors are expecting the unexpected. Disputed results, lawsuits, and civil unrest, can't be taken off the table. Actually, I think the outlier event, the one that people are expecting the least, is a smooth vote, a clear result, and calm transfer of power. This would be good for all global stock markets, but it probably wouldn't be the same stocks that outperform in that environment. And we could see pretty significant change in stock market leadership as a result.
So talking of uncertainty, the next big topic in the UK is, of course, Brexit. So have you divested or delayed investing in any UK or other countries that trade with the UK due to the uncertainties surrounding Brexit?
Yes, but that goes back to 2016. After the referendum, I reduced my UK exposure in this fund from 25% down to 5%. I just didn't know how the process would run or turn out. And, with a whole world of opportunities, why take the risk? I started to warm again to the UK after the general election. And while I don't necessarily agree with the path being taken, at least there was clarity of purpose and a clear mandate. And the negotiations have gotten noisier and uglier recently. But, don't shortchange the adaptability, the innovation, and the grit of British business. Some of the best companies in the world are here, run by smart, reliable, and honorable people. And we've got loyal friends all over the world who will back us. And once the sort of cliff edge options are taken off the table and there's some clarity on the new normal, I think there will be a flood of foreign investors who will come back in.
Mm-hmm. Okay, so my final question, I was thinking about sort of increasing awareness of climate change, particularly in the background of all these wildfires in the US, and about how there's increased importance being placed on how companies treat employees. So how much importance do you place on investing in new or established green technologies or incorporating how staff are taken care of by different companies into your decision making?
Well, this is not specifically an ESG fund. So if you're looking for a fund that seeks out or excludes investments based purely on environmental technologies, then this isn't right for you. But I do want companies that I invest in to take their environmental, social, and governance responsibilities seriously. I expect them to act and encourage the right behavior even if it means sacrificing short-term profits. So even though this fund is not core ESG, my investment process and philosophy has a natural aversion to the biggest culprits. So we don't own any fossil fuel companies, no oil and gas, no utilities, no mining companies, tobacco companies, arms dealers, or defense companies. Now, to be balanced, I don't own any wind farms or solar technology either. Here I have concerns about the pace of adoption, the profitability, and the viability of some of those businesses. So I guess I'm not at either extreme. I sit, sort of rather boringly in the sweet spot middle.
Okay. Thank you very much. I found that really interesting. I think that's all great. The questions I have for you.
Yeah, that's great. Oh, thanks, Beth. That was excellent.
Thank you both very much for that. That was really interesting. And if you'd like to find out more about the Rathbone Global Opportunities Fund, please go to FundCalibre.com and don't forget to subscribe to the Investing on the Go podcast.
Please remember we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or to sell. The fund may or may not still hold these stocks at the time of your listening.